What a day. What a squeeze to finish off the session today. Well, it's about that time of day again, isn't it? Back to work here tonight. It's Thursday evening already, September the 1st. We're getting ready for Friday, Non-Farm Fridays trading session. We got some big moves to finish up today's trading session. We get some big news tomorrow. Got a bunch of great trades setting up on my radar for tomorrow. You know how we roll on these videos. I'm going to cover all my favorite trades setting up for finally Friday. That way you have a game plan to make some money for the holiday weekend. Before we jump in, though, and get this party going, got a lot we're going to cover here tonight. Before we jump into get this thing going tonight, though, make sure you subscribe to our channel. I don't want you to miss, not tomorrow night's video, but after we come back from the holiday break. So make sure you subscribe so you don't miss our next upload. And if you guys enjoyed the video, right, do me a favor, hit that like button, will you? I appreciate you guys supporting this YouTube channel. Hit that like if you guys enjoy the content tonight. But let's get into it here. Enough of the intro, Joe. Friday is not going to trade itself. Where's the money on Non-Farm Fridays? Well, boy, oh boy, it smells like a squeeze here, doesn't it, right? Nice short squeeze. You had to think eventually these markets were just so oversold this week. You had to think eventually they were going to get some bounces here. I'm sure a lot of the buyers are very thankful they got this bounce now rather than getting it tomorrow during that non-farm chaos. Anyways, long story short, we got a squeeze is on right now. Now, we got obviously some potential buying opportunities here with bullish markets going higher. So I'm looking for some long trades, right? Get some key levels up overhead here. Would love to get some movement going higher here. But what do you think? Is there any possibility this could be nothing more than another bull trap? Is there any way the bulls are walking right into the slaughter, right, and about to get dumped right back down? It's definitely possible, right? We still have a long-term bear bias on this. So I definitely have some buy side, some squeeze trades going higher for the S&P and the Nasdaq. And man, right, I'd be lying to you if I said I wasn't keeping an eye out for this to be a bull trap. And we'll talk about ways to kind of catch that top and grab those reversals here for tomorrow. Oil is bearish, as you can see right now, but boy, oh boy, we get a lot of support here below us on oil, and we get a range above us. I'm definitely looking at the short side here on the oil, but be prepared. We may see a relatively deep pullback here before we start getting those real big shorts back down again. I definitely think there's money to make on the way up, and I think there's a lot more money to make on the way down. I'm going to talk about how to make the money on both sides of all these markets here, whether you trade the Nasdaq, the S&P, or the crude oil. So we're going to cover all those here tonight. Before we jump in, though, let's not forget tomorrow. Tomorrow is not just a Friday. It's not just a summertime Friday. It's not just a holiday weekend summertime Friday. It's Non-Farm Friday, right? Tomorrow is the first Friday of the new month of September. I realize we just started the month of September. Hope you guys had a great September the 1st. But we do have the biggest news of the week, for the most part, is tomorrow. That employment number comes out at 8:30 Eastern time. Now, I'm not going to bother to waste your time on if the number's higher, if the number's lower. It really does not matter. News is irrelevant to us day traders. My strategy is anytime I have a news event that comes out, tomorrow, of course, big news at 8:30 Eastern time, I simply give it 5-10 minutes after the news comes out, see how the market reacts to it. I'm not going to waste your time tonight by saying if it goes higher or goes lower, because none of that stuff is relevant. All that matters is no matter what the news comes out tomorrow, by about 8:40, we're going to know what this market feels like with that news, and we'll update our charts, update our game plan, and we'll go at it tomorrow morning, no matter what the news comes out tomorrow. Now, tomorrow is a Friday. It's a summertime Friday. It's a holiday weekend Friday, so be careful tomorrow. You know, I always try to tell my students trading is like riding a bicycle. If it's moving, relatively consistently, it's going to be easier. So if it's really violent and choppy, or if it's really slow, right, and barely moving, stay out of the market. Save your bullets after we come back after the holiday, because remember, a lot of professional traders, they don't even touch Non-Farm Friday, right? If you're trading big lots of other people's money, Non-Farm Friday is not exactly a very easy session to trade. So a lot of big professional traders, they save their bullets for that following Monday. Monday's a holiday, so reaction Tuesday. So promise me you're not going to go making too many mental mistakes late in the day tomorrow. Save that capital for next week, because we'll get the reaction, and especially since next week is the kickoff of the best time of the year to be a trader, the fall season. season, right? Going into the end of the year has always been one of my favorite times to be a trader. And if you haven't learned that yet, you will soon be converted to that as well here soon enough. So keep your eyes on the time tomorrow, 8:30 Eastern time. Don't force those trades late in the day, and think about that metaphor, right? Trading is like riding a bicycle. If it's not moving very well, sit on hands. We'll wait for better price action. And if you don't know what good price action looks like, get with me in my trade room and I'll make sure I give you a Harvard education on what good versus bad price action looks. Anyways, back to the charts here tonight. Nasdaq's ready. S&P's ready. Crude oil is ready. Guys, make sure you watch all the way through the end of this video tonight because you'll learn something new throughout the entire lesson. I'm going to cover all my favorite trades on each one of these charts. I'm going to cover different trade ideas, different variations of trade setups, and I try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way through the finish. Let's go Nasdaq first. We'll go Nasdaq. We'll go Emini. And then, of course, wrap things up on the crude oil futures. It's a 4,000 tick chart on the NASDAQ or the QQQs or the micro NASDAQ, 4,000 tick chart in the upper left-hand corner. Keep in mind, too, everything I talk about on the NASDAQ can be applied to the S&P. The S&P can pretty much be applied to the NASDAQ. So I'm going to start in the NASDAQ and move my way to the S&P. But they can pretty much be used, back and forth because they are very similar. There are some very big insights on this chart right now. There are some very big insights here. First of all, we do have an overall bear bias right now. Look at a 4-hour chart, look at a daily chart, look at a 60-minute chart. We are still very much bearish overall. Now, why do I mention that? Well, because of course, the next thing is a strong move higher. We saw a very strong move, a short squeeze to finish off today's session. Why is that important? Well, anytime we see a real strong move in one direction, we know that buyers are going to be waiting for a pullback to support levels to run it right back up and retest that high. Now, they might get lucky on this and end up punching this all the way through to some key levels we have waiting overhead. But you can imagine, though, with that overall bear bias, we may be met with quite a few sellers up there and looking for that dump back down again. That's why I said earlier, is this squeeze a buying opportunity? I certainly think there are going to be setups that we can use for it, but with that long-term bear bias, though, going to be careful because it may be nothing more than a bull trap if we try to buy high. The key will be buying low, right? Not buying high. You buy high, you're walking right into what could be a whole hell of a lot of hurt from the bears coming in. That long-term bias. The last kind of key insight here is the range. And of course, you'll notice the range, of course, the market, of course, chops down, runs lower, and we now kind of slingshot or pendulum swing, as we call it, right? The amount below the range is the amount above the range. This is a key area of resistance, and it definitely gives us another layer of confidence that a pullback in a double top area may get sold. It's also, of course, an area where if we can break through and keep going, usually that means we can successfully ignore that range now. We will have a breakout of that trading range. So buyers have the short-term momentum, sellers have the long-term momentum. How do we make some money on this for tomorrow? I'm going to cover a lot of different setups on the NASDAQ and the S&P. So let's start first with how do we buy this market? I know it's a long-term bear market, but a strong move down here. How do we buy this market? Well, first things first is we got that strong move up. I want to get down into some of these areas right here. Really try to get that pullback. You'll notice how I draw that channel coming in off the high, down around that low. I really like, if you remember my trade room, you know how much I love traps off the first touch of that channel. So I really like the idea of that deep pullback. And then, of course, my kind of favorite way to do this is anytime I see a strong move up, for example, I like to look for ways to trap in the opposite side of this move. So when I get that deep pullback, I'd like to get some bears coming in and see if they can't sell it short. Once those bears commit, I now know exactly where their stops are, and we can now simply buy right into those stops for, of course, a stop run. The easiest money you're going to make is when you're getting long and the sellers are getting stopped out because they're just getting out of their positions, right? They're hitting market orders, getting out of those positions, and so it snaps back up to retest that high. Now look for that failure into pullback combination. Look for that failure into pullback combo. Trapping the bears below, and then grab that first pullback, right? That first pullback off the low. I really like that back up to retest that high. And then from then, we'll look for some possible shorts, which we'll cover here in a moment, off of that high. Another question, another kind of topic or option here would be, what if we keep going higher here? What if the market doesn't pull back for us right now? What if we keep going higher? If we keep going higher, think of it this way, and we talked about this briefly last night, the bigger the move is, the more susceptible to a really deep pullback you're going to get. Okay, makes sense? So if the market, let's say, for example, we keep on grinding here and we keep going higher. If we keep grinding, let's say, for example, right, the channel gets kind of steeper like this, you know what I mean? Mark keeps on grinding and running higher here. The higher we go, obviously the stronger that momentum move is, but the more likely now for a really deep pullback. Now, you should love a deep pullback whenever you have a real strong move, because deep pullbacks are great risk reward, right? I can take a small amount of risk for a big amount of reward and get that retest. Again, anytime we see a strong move in one direction, we're trying to buy that pullback and go back to retest the high. So now think about this scenario. Think about now as we kind of chop or grind higher now, again, probably going to see more bears coming in as we go higher because of that long-term bear bias. Imagine that strong move down now, right? Now, with that really sharp, deep pullback now, again, nothing has changed except for the momentum of that move. Momentum is the only, it's the trade-off. Anytime you get a good risk reward, the price you pay for a good risk reward is momentum. Make sense? Because you got to get that deeper pullback to get a good risk reward. Where I'm going with this is where you want to look for the two-try failure, right? So really, really deep pullback that kind of separates off that moving average. Look for the bears now to try twice. Why twice? Because again, the stronger the pullback is, the more likely the bears are going to want to take it lower. Once those bears get trapped in, as we say, think about now where their pain is, right? Think about where the bears are in trouble, and that's where I want to run it going higher. Now, one more thing. As the market now runs and snaps higher, this move higher can be very, very sharp. And as I mentioned before, I would love to get that first pullback, right? That failure into pullback combination. But a lot of times, because it traps in so many bears right there, a lot of times you're not going to get it. It'll snap up, shallow pullback, right? Shallow pullback, and you'll get what we call a trap or a two-try trap right below that prior swing. Does that make sense, right, guys? Right, so we get the two-try failure. We keep grinding higher, sharp pullback, lock in those bears at two tries. We're buying right into those stop losses as fuel. The goal is to go back to retest the high. As we try to go back to retest the high, we look for those traps. Okay, failures and traps. These are where some of the easiest money is, at least in the futures markets that we trade in our trade room. And guys, I know that most of you have learned these failure setups, these trap setups. You've learned how to define what a strong move looks like. I get so many great emails and comments every week from you guys making money with these setups. But listen, if you're watching for the first time right now, if I'm speaking Greek, right, if I'm talking a different language, if you don't know what these patterns look like on a real chart, obviously I'm drawing here right now. What I'll do is I'll put a link up here for you in the upper right-hand corner for our free trading course. If you're one of the few folks who haven't taken that class yet, take that class, learn the setups, learn the strategy. If you're like me and you hate missing the best trades each day, or you're taking too many losses, the strategy I teach in that free trading course will get you into far more winning trades, make it easy to know where the losses are so you can avoid them. And it's really perfect for somebody who's trying to make a jump into full-time trading. So I'll put a little link up there, right? Grab that link. That way, the next time I say deep pullback, two-try failure into little trap before we retest the high, you'll know exactly what I'm talking about. So watch this thing as it goes higher. Look for that pullback and that retest as we go. Now, the $1 million question, maybe the $1,000 question. How do I sell this thing now, right? How do I sell off the top of it? Oh. And wait, what if this thing is nothing more than some V-top and just runs right back down again? Surely I could make money on that, right? You absolutely can. Let's talk about that coming up next here on the S&P. The S&P, of course, is very similar to the Nasdaq here tonight. Same basic idea, right? We have a bear bias overall. Again, look at a 4-hour chart, look at a daily chart, look at a 60-minute chart, right? We have a bear bias overall. What that means is that as we go higher, we got more likely to have more bears entering the market. I'm talking to you, to all the new traders out there, myself included. When I was a new trader, I always got caught buying too high. So we got to be very careful buying high. I want to buy low, right, at support to avoid those bears sneaking back in. The second big clue, of course, is that strong spike higher here. Anytime we see a strong move, we're going to likely see a retest of that high. We've talked about this on the NASDAQ chart. And then, of course, you can see here a third kind of key insight is this prior range low, the prior range low. You'll notice on the NASDAQ, we were at the pendulum swing. The S&P now is pushed pretty consistently, pretty considerably through that pendulum swing. And of course, you can kind of see where we are now, right? We're kind of getting nice and comfortable around those prior lows. That's an excellent area for bears to be looking for some shorts. So we definitely do have that on our radar here right now. Now, not a lot has changed here for the buy side, right? We're still looking for that pullback, those failures, and that retest. If we go higher here, we're still looking for that deeper pullback, right? That trap. So keep those in mind. Now, we mentioned the double top reversal. How do I sell this market? Right? How do I sell this market? There are three basic ways to short a market that has this much strength going higher, because you can't just simply walk in front of that freight train. You ready? Let's talk about this. First one, the most aggressive one, is what we call a crown reversal. Okay, we've talked about trapping in the buyers or trapping in the sellers on the previous chart. Now, imagine we pull back to the moving average. The buyers try to buy it up once. We pull back lower. The buyers try a second time, lower low, and we get a little tiny trap above that high. That is called a crown reversal. You can see one down here, move lower, right? Bears try once to go lower. We go up. Bears try it again. They get underneath that low. That is a crown reversal. And it really is the safest way to, in this case, buy off that low or short off this high before we get a pullback and a retest. Okay, so you'll notice the situation I'm describing here, just short off the high, we don't have that retest yet. Makes sense? This is why it's so important to buy low in an overall bear market, because if you chase it as it's going higher, you're walking right into a trap. Right? Makes sense? So again, we take out, obviously we pull back now, buyers once, buyers twice. Now, one more thing about these type of crown reversals. Okay, a good rule of thumb is the stronger the momentum that you're trying to reverse, the bigger the to try needs to be. So, for example, I am not going to drill down to a 233 tick chart right now. This is a 10,000 tick chart. I'm not going to drill down to some 140 tick chart right now and look for some teeny tiny trap off the high. Right? You're more than welcome to do that, right? But that's not going to give you very good results long term. Does that make sense? This is a very strong move. So the stronger the move, it's unrealistic to expect just a small little setup on this. What's a big setup look like? Pull back once, pull back twice. It's going to take a while, right? It's going to take a while to turn that ship around, but that's the idea behind it. So keep that in mind, and obviously I'll be there with you guys in our trade room to make sure you know how big is big enough and kind of fill in some of those gaps here right now. Now, the much easier one is we wait for that pullback. We let them retest that high. And keep in mind, guys, this could also be up here, right? Deep pullback and back, right? It could also be up there as well. I'm obviously doing my best with what I have to work with right now. But, again, if we get up, right, and then pull back up, same thing, right? So, okay. So at this point now, let's say we pull back here, right? We pull back, they trap in those bears right back up, retest the high. Now let's try to sell off that high. How do we short off the high? There are basically two setups I look for, okay? This is really, really important. This is one of the most important because, again, crown reversals are great, but they're more aggressive. So now we pull back, we retest the high now, okay? As we always say, strong move, mission accomplished. Now, the smart money, right? The big lot traders, the people who have earned our respect in the market, they're buying nice and low. Okay? Who's buying up here? Who's buying up here? Rookies, right? The 15-year ago version of me buying way up there, right? The 2 week ago version of, I'm kidding with you, obviously. Before you found my newsletter videos, I'm kidding with you, obviously. But the reality is, these are the weekends, right? These are the uneducated traders who haven't quite paid their full tuition yet to the market. At this point now, the smart money's already in. They're taking their profit off at the high. Now we rope in some of those weekends, right? 1 try for the bulls, 2 try. Again, why 2 tries? Well, it has to do a lot with human nature. Human beings are creatures of habits. We oftentimes will try things twice before we give up. I covered this all, by the way, inside that free trading course, the psychology behind why these 2 tries are important. Number 2 and number 3 is very prevalent in trading. Anyways, 1 try, 2 try. Think about where their stops are, right? Think about where their, not that Joe. Think about their stops right now, right? Where's their pain? And what I want to see that nice, strong signal, and I can run it back down to retest the low. Now, once it runs lower, okay, once we grab that double top reversal using a 2 try failure, now, this is the fun starts. Now we mark off that low, right? We go back, we look at some of these lows here, and we draw a trend line off that low. This will help us now find a hidden channel, okay? And repeat after me. First test is the best test. What you want is you want the first touch of the high of that channel. I always tell my students, don't get frustrated if we don't get a good signal off the high. Whatever you do, though, don't miss that first test. Okay, that first test is really, really valuable. It's one of the highest percentage trades you can find after that momentum turns. Now, obviously, I'm keeping this pretty simple right now. This could be a trap setup. It could be a failure setup. It could be a pullback. It could be a strength move going lower. Again, you're going to learn those entry tactics in that free trading class that I mentioned earlier, right? So I want to grab that first test off that channel. Where does the market want to go at that point? It's going to want to go back and take out the side of that trading range. That's a good target. And of course, back down to retest the low, basically this low of day, right? That's what we look for, that short. Okay, we covered the crown reversal. We covered the double top reversal. Right? Now, what if this thing just V-tops and cooks it right back down again? Here's where the old pop and grind comes in handy. There are two ways to basically 2 ways to trade a V-top reversal. The most common is going to be this one, where we basically V-top. And again, this could go up and then V-top, right? So please don't take this price line by price line too literally here, right? We're going to use this no matter kind of where this thing sets up, right? So we get a strong move up. Right now, as we pull back to the moving average, buyers aren't doing anything, right? The thing disappears and it just rips or simply pops and runs lower, right? Then what happens is it starts to grind down, right? So to grind down, the grinder, that is the key. That is the key. Once we see that pop down and the moving average will come over, because what's going to happen a lot of times is it'll pull back and jump off that moving average, right? Like it did right here, where it goes up, back, and jumps, right? Most of the time, it's going to jump off that moving average. When it pops lower, though, and begins to grind down like that, that's where the magic is. Draw that trend line nice and tight off those lows, bring it right up around those highs, and you got it. First test is the best test. I want to get above prior swings. I want to get above the moving average, get buyers trying to buy off the moving average. We can use their stops as fuel with a failure. And then one really easy kind of giveaway on these. Obviously, we know the bears want to go back to retest that low, but an easy way to think about it is the first leg and the third leg are very symmetrical. Okay, in my trade room, we're always looking for that first leg, the first leg of a new bear trend, first leg of a breakout. They're usually very symmetrical thereafter. So keep it in mind for that pop and grind going lower. Then one more thing too. Let's say we do take out that low or we do pull back, right? Again, we're looking for those bears to come in, fail so we can buy into their stops, right? But let's say the bears hold it, right? Let's say the bears are back in town again and they run this thing lower, right? So if we get that pullback to the moving average and we jump off that moving average. This one will definitely be the more challenging of the two here, because these will for the most part, get you in a little bit lower right down here. So you got to kind of find that new channel, bring it down off the low, find that channel high, and then grab it from there. The one thing about this one is you're going to want to get this entry here. Well, you want to get the entry before that move lower takes out these lows, right? Before that takes out those lows. If it, for example, right, if it just simply runs, pulls back, right, and just blasts down to that low here, that's not exactly as much of a desirable trade right there, right? By the way, how would I buy it down there, right? What if the market did take off the downside here, right, and just completely collapsed and ran lower? How would I buy that? I would use one of those crown reversals, right? So look for the moving average to come over here, right? Look for it to 1 for 2, that trap low, buy it back up into that trading range, because of course ranges act like magnets. I could also, of course, simply wait for the price to pop up, retest that low, mission accomplished, then rope in the weak hands, right, the inexperienced traders, and use their stops. I just talked about this up here, right? It's the same idea, except I flipped it here to the buy side below that low. Those really could be some of the best trades tomorrow, right? Those could easily be some of the best trades tomorrow, because we have that big news coming out tomorrow morning at 8:30 Eastern time, right? If all hell breaks loose, let's say, for example, right, the market kind of pulls back, we get that big, blast going lower, and who knows, right? Maybe we get another one of these things we saw today where it just keeps on, grinding down. Again, the minute these things start to grind on you, now you go off that low, off that high, and now we're looking for that first short, right, off of that high, right? Just make sure you get some really good proof going through that low, right? But if all we do is end up back at that low, though, we got to be careful selling down there. I think that makes sense, right? You're selling, again, you don't want to sell low, you want to sell high. You don't want to buy high, you want to buy low. I know it's a very simple rule, but it's amazing how difficult that rule is to follow. It's one of those easy to understand, hard to do rules. It's welcome to trading. All right, we've got some more levels overhead here too, 4,000 overhead. So don't be surprised here if we keep getting this thing to punch up. Wait for that deep pullback, back up, and then we'll look for that short back down from there. I'm sure I've missed something. I'm sure the market will throw something at me. I don't anticipate right now. That's why, of course, we'll get together every morning in our trade room, and I'll be there with you every step of the process. All right, the Nasdaq's covered, S&P's covered, the long side, got the short side. Let's wrap it up here now with the crude oil. Now, please don't forget, oil is, out of all of these markets, oil is the most news-driven right now. We have the non-farm payroll number tomorrow. That's not the news I'm worried about. I'm worried about, will we hear any more updates from OPEC? Will we hear anything out of Ukraine, Russia, the whole energy situation, right, to Europe? That's what I mean when I say we're very much news-driven. So, unfortunately, oil is a bit messy these days because of that news-driven personality. But, of course, we'll do our best tonight to prepare, and we'll trade the reaction to whatever news that we get here for tomorrow. There are four key insights here on this oil. We've got a bear bias, you can see here, going lower. We have an overall bear bias on this. Look at a 4-hour, look at a 60-minute chart, right? We are overall a bear bias. And you would think that fundamentally oil would be a bit bearish right now as well. Of course, pending any new updates from OPEC, right? All things equal, with the central bankers around the world basically throwing their all their firepower at killing the economy to kill inflation. You got to think that's going to be naturally bearish for the oil. We've also got the spike and wedge on the chart right now. Spike and wedge, kind of go back and look at this, right? We had that move down. It's kind of a tail end of this move here, right? It's that spike down, and then you'll notice we're kind of wedging out. You know it's a wedge because the channel doesn't fit anymore, right? It was a channel at first, right? It was a spike in channel at first, but you can see though that channel doesn't exactly hold very well right now, so this becomes a spike and a wedge. Now, why is that important? Well, first of all, anytime we see a spike and wedge, we know where the vertex, where those two trend lines come together, is a very big support area. That's one big problem the bears have right now. Another big factor about wedges, though, is that markets that are in a wedge, they love to pull back into the base of the wedge, like right where that wedge begins, right? So that area, that's why I said earlier introduction, we may see a pretty violent pop off of this low. We've got, we're pretty much at key levels of support down here. We're right towards the end of that wedge. Now, it isn't guaranteed to pop. A lot of times wedges will simply, right, kind of submit down here and they'll kind of go sideways into a range. So we'll keep an eye on that. But generally speaking, though, wedges are going to go until they reach that vertex, which we're pretty much at right now, and then look for that nice pop back up. And then, of course, from there, we'll look for that drop back down again, or potentially, if something was to change from OPEC or something overnight, possibly a run back up to that 90 or backs up to those key levels at 91.5 up overhead. So spike and wedge is a very, very big clue for me. The next one here, I think, is just as important because you'll notice we get a range above us. Now, why is a range important? Well, a range is important because if I'm thinking right now, I'm going to sell this pullback to the top of this channel, like that's oftentimes a pretty good trade. On a wedge, you can find a little hidden channel like that. And you can short off the top of that channel. The problem, obviously, is that range, right? And what happens a lot of times is, and we've talked about this many times this week already, is that when a market breaks out below a range, if they can't hold that area, if the bears can't hold this area, there's a very good chance we're going to pendulum swing, right? You saw that example on the Nasdaq and the S&P. Pendulum swing back up somewhere equal, right? The equal amount back higher. So when you throw in the trading range, it really all kind of lines up together, right? The wedge and the range. I do think there's shorting opportunities on the underbelly of that range, but I got to be a little bit careful, right? Because of the wedge, right? The wedge. And then, of course, one of the biggest concerns right now, if you're a bear, is we're sitting at major support. Look at a daily chart right now. Look at a daily chart. If you look at a daily chart right now, you'll see it kind of goes up, right? It kind of chops around, and we've got all of these lows. Like we're sitting right there right now, right? So we're sitting on a very, very, a ton of support in that overall bull move we saw what seems like a lifetime ago, right, late last year. So we've got that area of support right now. The bears, what may happen is we may end up bouncing up off that area and then seeing bears come in, short it back down. Bounce up off that area, bears come in and short it back down, right, because of all of this support area that we have here. That is this zone right here, with really the climax of that zone at 83.65, 80. Really, guys, this whole area right here could really be just one big green block of demand, as the kids say these days, right? Support zone, as all of the old folks say. So we know we have kind of support there. Okay, so now I've chewed your ear off on this one, right? Hopefully I haven't confused you too much on all these moving pieces. How do I sell it? How do I buy it? We're overall bearish. So first of all, I like the idea of the short off the top of this channel, but the idea of shorting below the low of the range isn't exactly a very desirable spot. So I want to anticipate buyers coming in and buying this thing to run back higher. If I can get those buyers to come in and try a couple times, I would love to grab a trap for that short. Now, why a trap? A trap because I'm right around the wedge, right, that vertex. What I'm going to do is I have to sell as high as I possibly can right now. And a trap, right, a trap high, a bull trap, right, technically speaking, that's the best way to do it, right? If I come in and I go, all right, I'm going to let those bulls try and then simply sell into their stop losses, I'm getting in a little bit lower than I'd like to be, right? The risk reward ratio isn't as good. If I can let those buyers try a couple times and then get a trap on this, now my risk reward ratio, now my risk is here and my reward is there. It's a more desirable trade, therefore it's a more reliable trade. The more desirable it is, the better the risk reward ratio, the more reliable it's going to be because of that old self-fulfilling prophecy, right? So to go back down to retest the low. Now, what if we end up running higher here? Okay, this is where that two-try failure or that crown reversal comes into play. Let's say, for example, we make that strong run higher now. Remember, the stronger the move, the bigger the reversal, the bigger the pattern needs to be, right? So buyers once, buyers twice, there's that crown reversal. Why the crown reversal? Because again, when we see a strong move higher, we expect a pullback and a retest of the high. That's my way to protect myself from selling high rather than trying to sell down here where it could easily roll over and bounce me right back out. Make sense? Remember that you want to sell high, don't sell low. And if we have a strong move going higher, there's probably going to be a lot of buyers waiting down there trying to run it back higher. If I get that trap first, now I'm already in the money, right? We're already in the green on that trade, and the pressure is off. If they do want to run it back up, at least I've already grabbed a good chunk of it, and I can get rid of the risk on that trade. That's the key to trading a reversal before the retest. If we get the retest, we run higher, we pull back, we get that retest. Now we have so much more more options here now, right? We run up, they pull back, they retest the high. Now we have the smart money is already in. The smart money's in low. They're taking their profit here now. The weak hands come in 1, 2, always 2 whenever we're trying to go against the overall direction of that move. That's your 2-try failure. And then as it rolls over, I find that new channel, right? That same song and dance we talked about earlier. 2-try failure, grab that channel test, and then run it back, right? And then run it back down to retest that low. Now, one more thing as we pull back, okay? If we pull back above the moving average and we start to jump off the EMA, right? The minute they pull back and jump off the EMA, there's a very big difference in my eyes between a real sharp pullback like this, right? That goes 1, 2, and then trap, or a strong pullback that pulls back and then jumps off that moving average. That is a reversal, guys. Now, we do have an overall bear bias, right? So, but the point I want to make here is if you get that 1, 2, 3 jump going higher, now we do have enough to be a buyer on this, right? Now we do have enough to get below that prior swing, get below the moving average, trap in those bears, right? And then go back and retest that high. I can buy this if I get that 1, 2, 3 blast, right? Jumping off the moving average. Remember though, it's an overall bear market, right? So buy low, take profit at the high, and then it's that 1, 2, see ya, and then dump it back down from there, right? I think that makes a lot of sense, right? So if it reverses, we can buy the pullback. If it doesn't reverse, we'll look for that short back down again, right? Is that making sense here? Let me know in the comment section below. Let me know if this is making sense for you. And if you want to, if you're feeling it tonight, give me a hell yeah down there. I always love when you guys have fun in the comment section below. Now, also too, right? Watch out for that grinder. So if it pops up, right? If it pops up and, pulls back and jumps, great. But if it pops and begins to grind, right? And again, this will feel like, it almost feels like there's a string on it, right? It's like it keeps on grinding. It melts up, if you will, right? It'll be very slow too, very misleadingly slow. Again, mark that high, mark that low, and our job now is to buy that first test, ideally underneath the prior swing, using any of the entry setups we talk about in that free trading course, right? Profit off at that high, and then potentially that drop back down again. What if we go up, we end up all the way back down to retest the low? Can I buy down here? I can. What's the problem though? Momentum is bearish, so make sure we use those 2-try failures after they retest, and then as we go higher, find that new channel, right, and grab that move. Where are they trying to go? They're trying to go back up where? Take up some of these highs overhead here, right? The range acts like a magnet, so trade that rotation right back down as we go. If the market keeps on running lower, right? If we keep on grinding lower, really not a lot changes. The big difference is I'll go out and adjust my channels down. I'll wait for that nice deep pullback now and try to retest that low. Remember, anytime we see a really big move down, you want to wait for that nice deep pullback to attract in more bears, retest the low, and then we can start looking for that reversal back up from there. All right, guys, remember tomorrow morning, 8:30 news, bright and early tomorrow, and don't force those trades late in the session tomorrow because it is a summer Friday on a very, very festive holiday weekend. Which reminds me, if I don't see you guys in our trade room tomorrow morning, I hope I'll see you back here same time, same place next week. Have a fantastic last couple drops of the summertime season. A very happy Labor Day. I'll be doing no labor whatsoever on Monday. I can almost guarantee you that. So go to the beach, have a barbecue, take the kids to the park, have fun, do whatever you do during the summertime, and rest up this weekend too, because we have the fall season coming, starting off middle of next week. The best time of the year to be a trader. Guys, if you want to learn more, again, I would grab the free course link first. Right? If you want to learn the strategy, grab the free trading course, learn that trading strategy, and don't forget, if you're looking for a great place to learn and trade along, if you're missing too many good trades right now, if you're taking too many losses, our trade room is the place to be every morning at 8 o'clock Eastern time. Start with the free trading course first, learn the basics, get that going, and that will be ready and primed up for us in our trade room as a brand new student. Don't be afraid to call the office, guys. I'm always here if you have any questions. Don't be afraid to call the office there if you got any questions. We got live chat you can also use as well, and you can drop questions in the comment section below. All right, guys, I'm going to wrap things up here for now. Have a fantastic rest of your evening. Thank you so much for watching all the way to the end. Now hit that like button for me. Make sure you subscribe, and I'll see you guys next time. My name is Joseph. Be well. Be nice to each other, will ya? And be here next week. Adios, amigos. Bye-bye for now.